What's up? How we doing? Happy Midas Monday. We are ready to rock, man. We are minute 12 out from the close up of this 5-minute bar, testing 30,200. We'll see if we head on down to 30K here today. The full range on the day here thus far, we're looking at about 125, 130 points. It has not been all that volatile. We've got a big range day with little moves inside of the range. It's of course wide enough for us to get moves inside the range. The big range, I mean, the full day's range. But still, that doesn't change the fact that the overarching daily context here is a big trading range. Even though I'm open to continuation inside of the range, right? How we doing, guys? How we doing? Come on in. All right, we'll get the roll over here at 36, 20 seconds out. Yeah, so what I'm looking at here, we've effectively got this with potential for this in the interim. Of course, the assessment, my baseline has to be this. We could see this end up bouncing early. As volatility slows down here on the day, you can see that full day's range starting to tighten up. That's not unusual. Big Manuel, how we doing? Javaz, what's up, brother? Edge, that's right. That's right. We've got a big flash sale going on at TakeProfitTrader. You got half off. You can pass them even quicker. You know, Take Profit has not run a deal in, man, it feels like it's been about 6 months. They've been running just 40% off, no activation fee forever. But we got a flash sale going on over there right now. Code BIG, B-I-G. Okay, 37 here. Concern of mine is this single bar sideways range. It doesn't look like much, but that's been 25 minutes. You know? So keeping an eye on that. Nick, big dog, welcome on in. How we doing? Yeah, you know, so when things get this slow, my brain immediately defaults to scalp mode. And with scalps, it's a lot more contextually driven, with, of course, still price action based stops. But scalp mode, of course, will often look a little bit different than traditional big trend mode or high volatility mode, at least as far as, you know, setups. So watching 37 here. We're about 45 seconds out till the rollover. The problem here is even if you look at the full day as a big trading range, and then you consider that this, you know, if you want to call it a soft bear channel, a tight soft bear channel, single bar soft bear channel, whatever you want to look at it as, contextually speaking, there's not a lot of reason for me to get long in here until I get an actual setup. And the only reason for me to get short would be if I can do so on more of a limit order reversion, or I suppose reversion style scalp, rather than a continuation style trade. Because in a really low volatility environment, ATR now sitting 21. By the way, ATR, that's the average range in points here of a 5-minute bar. In a low volatility environment like this, which 21 is very low on a 5-minute NQ chart, how much can I really expect a bear body closing in a continuation style trade to go far fast? The probability of that is much lower than if it was higher volatility and more channel or even trend style price action, right? So you get a lot more confidence out of the bulls to buy it back up into the range, a lot less confidence out of the bears to dump it down outside of the range. So right now my mentality is range style, limit order entry reversion scalping. Yeah, so as 38 rolls over here, If this bar stays, you know, looking even remotely like it currently does, this ATR is going to drop below 20. "50 seconds out." Okay, there you go. There's the rollover, 38 into 39. ATR did indeed dip below 20. You saw that. You saw it dip below 20 there on the average range here of a 5-minute bar. This little range from 33 on to 39 is killing the volatility. It's all right. I mean, I can still make sense of the look. Just gonna need these bulls to get a little bit more confidence here. They're having trouble even getting us up through the midpoint of this little sideways trading range. Or at least I should say, potential sideways range, currently more like single bar soft bear channel. Biggie, what's up, brother? Question. Trader recently said, they say a trader recently said, this isn't a job, it's a way to build wealth, but it's not a job. Thoughts? That's the opposite. It's the opposite. Trading is a job. It is a way to drive earned revenue. Now you can make a fucking lot of earned revenue. Trading is not how you build wealth. The way that you build wealth as a trader is you trade hard, you try to trade big over time, you make a lot of earned revenue, and then you invest it in another vehicle. And if you're a first generation person, meaning you don't come from money, but you're trying to create wealth, everyone will tell you diversify everything. It's like, yeah, okay, well, the wealthiest people in the world are diversified in exactly one or two things. Diversifying heavily is a way you preserve wealth. We don't come from wealth, so we have to create it. How diversified are some of the greatest entrepreneurs of all time? Maybe now they're a little diversified, but even not really. All of their wealth is in the stock of their company. All of it. So, you know, again, earn as much as you possibly can from trading, which is 1,000% your job, how you create earned revenue, and then pick a few things that you really believe in heavily and invest everything into it. That's, again, some people out there. Not financial advice. I'm not a financial planner, whatever the fuck. That's just my opinion, dude. How many people do you think told Warren Buffett, I don't know, man, you probably shouldn't buy that much Coca-Cola stock? He's like, fuck you, homeboy, I like Coca-Cola stock. Buy it all! All right. Bar 40, 337 out. But yeah, I mean, you know, I've actually been saying this for so many years now that, you know, when you say something over and over again, you almost kind of like forget to keep saying it. I don't know if anyone relates to that, but the whole, it finally hit me one day in my early 20s. I was like, okay, I don't come from money. So if I just put everything into the S&P 500, everyone talks about if you invest this much per month for the next 60 years into the S&P 500, you'll have $1 million by the time you're 77. It's like, A, why the fuck do I want, yeah, sure, I'd rather have $1 million at 77 than zero, but $1 million when I'm 77 is going to be like fucking useless. Because everyone decides to forget conveniently to adjust for inflation. And the S&P 500A barely beats inflation. I mean, it beats inflation, but you know what I mean. And B, this is assuming that the market's going to go up forever, and you're never going to have a period of 8 years where you see a substantial dip. And what happens if that is the period of time when you would prefer to retire? I don't plan to ever retire, but a lot of people do, because they want to stop working. Fine. Look at the Japanese stock market, you guys. It doesn't have to always go up. You know what I mean? Now, if I'm going to bet on anything, I'll bet on America. But all I'm saying is, like, everyone says buy the S&P 500, and this is people that are already worth 400 million telling you to do this. It's like, we don't come from money. Diversification doesn't build massive wealth. Putting everything into something you 1000% believe in forever is what builds massive wealth. And a lot of times it's going to be yourself. I'm not saying diversifying and buying the S&P is a bad plan. I'm just saying you got to determine what your goal is, big dog. If your goal is to just have a retirement and have a little nest egg and, be all right and maintain the lifestyle you currently lead someday, then sure, run the numbers. But all I'm saying is, please, dear God, don't forget to adjust for inflation. Everyone likes to conveniently leave that out because if they include it, it breaks their argument. Like, I gotta tell you, like, if you're especially young, if you retire in 55 years or 45 years with $1 million because it sounded really good when you were 25 on paper, but oh shit, I forgot to adjust for inflation, you are going to be living a life of poverty. We don't want that for you. What is that? Okay, 4 minutes out. Big bar 41. God, don't get me started on Monday. All right, so the wick low of bar 11, right around 30,156-ish, is low of day. Again, the full day's range is like 130 points. So that's reasonably tight. It's not. If you looked at this range and just kind of assumed you looked at it with your eyes from 6 weeks ago, you'd be like, yeah, it's probably like a 300-point range, maybe 400-point range. That's 130 points. It's tight. Volatility's low. ATR is below 20. Chat, yeah, about the 9-to-5 job thing. They say maybe that... So if you're just joining us, previously we were talking about, someone in the chat said that someone told them that trading is not a job, it's a way to build wealth, but it's not a job. They're following up now saying maybe they were saying it's not a traditional 9-to-5 where you're paid for your time regardless of the outcome. They say, I don't know, this feels like different than a job to me. Look, I've never worked a 9-to-5 job, so I can't really speak on a 9-to-5. I'm not arguing that this is like a 9-to-5 job. I'm saying that this is your job. The point of trading is to generate revenue for you to then take and then invest as you see fit. If that means growing your trading portfolio to continue to generate higher amounts of revenue, then do that. If you have a particular company that you want to maybe even start or invest in and go heavy there and be concentrated, which is how you build wealth, you concentrate. Diversifying is how you maintain wealth, especially if you diversify heavily. But no one's comparing this to a 9-to-5. That's just how I think about it. You show up, do your job, generate revenue, create capital, or I suppose put capital in your pocket, and then use it elsewhere or here to concentrate it to help build wealth. But I mean, realistically, wouldn't the ideal scenario be that someday your concentrated investments, whether it be a business, a portfolio, whatever, maybe you're like, you know what, I'm really good at multifamily real estate. I'm gonna buy 32 units, work my way up from there, blah, blah, blah. I'm gonna have, 8,000 units. Okay, you're concentrated in real estate, fine. Or if you're like, no, I'm gonna start this company, whatever, I'm a good programmer, I'm gonna start this, reinvest all my trading profits into this, or you're like, I'm gonna reinvest half my trading profits back into my trading business and half into this, these two stocks that I really 1000% believe in for the next 50 years. Great. But it's the same thing. I would describe, if you're an entrepreneur and you own a business, I would describe the daily business operations as your job. And then you take the profits and reinvest it either into the business and or, depending on the stage in your career and how hard you're trying to grow things, into a concentrated other investment. But again, the ideal scenario is that eventually your other income sources would outgrow your trading and you're still trading and making a lot of revenue from trading. But do you understand how much that would take the pressure off? If you're making 6 figures a month just from trading, and then 30 years from now, your other ventures, whatever they may be, even if they're just investments, are producing more than you're trading, and you're making 6 figures a month trading plus, you better believe your trading is going to continue to grow because there's going to be no pressure. Because in the back of your head, you're like, man, if I didn't even trade, I still make X amount a month. That's ridiculous. But I still want to trade because I like trading. And it's the revenue generator. But that would be best case scenario. Question, with the low ATR, do you size up and go for fewer points? Or do you keep modest size and stay in a long-term trade? I trade RAM the same way that I typically would, and I allow the market, in a situation like this, I typically allow the market to adjust my sizing, my risk, for me, because I know in very low volatility environments, edge is a little bit smaller and a little bit harder to come by, which means that, with the theory of exponential bet sizing, it's not really a theory, it's just a proven mathematical model. Poker players use this model all the time when they think that they have a better expected value because they have a better hand and better probability of making money on this hand. They bet exponentially more money, right? So in trading, I'm not trying to bet the same bet, right? The same amount of money when I have less edge than I would on a trade where I know I have tremendous expected value and it doesn't come around that often. And there's two ways to adjust your size. You can adjust your size and or let the market volatility do that for you, meaning it's very low or very high. It all adjusts your dollar amount risk, right? Okay, 13 seconds out. We'll get the rollover here from 42 into 43. Yeah, I know it's tempting to size up a lot when the ATR is like 8 and you're just coming off a period where you were trading an ATR of like 80. I know it's really tempting to say, well, I should 10x my size. Yeah, but your edge is smaller, and usually it's relatively substantially smaller. So that doesn't make the most sense in the world mathematically. Okay, so low a day, by the way, is still down here, the wick low of 11 on your screen, right around 30,156 region. And it makes me wonder if we're going to see a sideways range just continue to develop kind of around the body of 39. But you know that the bears, their number one concern right now is they want to see us take out the low a day. Even if they do, you might say, is that a stop hunt opportunity? I mean, the look of it might be, sure, yeah. But contextually speaking, for me, the answer is a hard no, because it's so slow. It's such a grind. And it's not like 11 was even such a ridiculously hard curl because you had all this going on back here. Right, so the more probable event is that we see some form of range around here. Even if we take out the low, still the highest probability thing is that we see some form of trade range. So again, my mentality here is just, if I can make sense of a scalp, I'm putting on a scalp, but I got to be able to make sense of it because it's really easy, by the way, especially if you're a bit newer to the scalping side of things. Scalping is the easiest way to quietly get rid of the profit that you're actually making on your good trades without realizing it. Because scalping, you know, how many of you have done this in the chat? And basically all you better raise your hand. How many of you have done this? You take a couple good trades. Let's say, you know, you make money on both of them early in the day. Great. And then you find yourself scalping the rest of the day. And you look back and you're like, yeah, I probably took, I don't know, I probably took like 7 scalps. And then you look at your tickets and you're like, holy shit, I took 22 scalps. And if you don't have edge on those, you just gave back all of your profit from the 2 trades and then some. It's really easy to lose track of how many scalps you're taking. And it's also really easy to give away your edge on the scalps because you just get used to hitting that button. We've all done it. You got to be careful. Again, you can make money scalping, but you have to be very strict about what you're willing to take. That doesn't mean taking few trades necessarily. It just means taking as many quality scalps as you're offered. And obviously, screen time makes that a bit easier. Okay, let's watch the roll over here. 43 into 44. Got this soft single bar bear channel attempting to get a little bit more aggressive here. So I'm willing to get short for a scalp, but I'd prefer to see a bit better of an entry here, just because I know that that range is, with how low volatility is, a range is a relatively, what I should say is it's a more probable occurrence here, given 42 and 43, really all of this, than it would be if this was a straight bear trend with an ATR of, 81. By the way, this is a 2-minute chart here. Okay, so you got that wick low of 11 just off screen. And you've got bar 44. Things slowing down just a hair here. Low here at 155. Yeah, they're going to take it out. Okay. Okay, so we have officially a new low of day. The wick low of 44 here. Now, really crucial. What happens now? Right? Because we just took out the low of day. And the whole range on the entire day is 130 points. It's not like this is a 900-point range. Which would potentially invite this bear trend to be a little bit higher probability that we actually just continue a bear trend. But a lot of times after you see this sort of thing, the bears get what they were looking for. They took out the low of day. Now I really need to watch price action and see if the bears actually mean it. Because unfortunately, you often end up in really low volatility environments. ATR currently 19.25. It's low. You oftentimes get some bull confidence stepping ahead of this train, whereas if the ATR was 75, that confidence is a whole lot less. because the bears just have a lot more inertia. So a little bull bounce here wouldn't surprise me too much. It's just hard to manage risk. What would surprise me here is a really big clean bear close. Deep below the wick low of R44. That would shock me a little bit. But that would be a very nice look. So let's see if the bears got it in them. Okay, well, this bar, we still have 3 minutes left on this bar. So if they do close it up as a nice clean bear body below 44, I will get short. But in the meantime, I can take a scalp and bet on the trading range. Because we now have a new low a day. We took out the wick low of 11. And we'll see if we get a bull bounce, which would backfill a trading range. If we don't, we take out the low of this bar. Then I want to watch to see how this bar closes up. And if it closes up as a clean bear body, which again, I'd be very surprised if it can close up as a clean bear body, then I have a potential. It would be the early trade, which I'm not super into, but I have the potential to get short. For continuation, let's see what these bears got. Okay, flat. Let's watch these bears. 2 minutes. Let's see if they can get a nice clean close on bar 45. Minute 47 out. Okay, 60 seconds, ATR 19. Range on this bar currently about 20 points. Bears trying to get feisty. Let's see if they can hold it up. Seven seconds out. Copy trader engaged. Stop limit sell ready. Goodness. Error. Okay, next bar. You see that? Bears took out the wick low 45 immediately, an immediate bounce. That's fine. No fill, no trade. We'll watch 46. Sometimes those errors, and by the way, when I say error, what I mean is you place the stop limit sell and they've already taken out the low. A lot of times it ends up being protective, which you guys have seen a lot. If it takes out that low really fast on a bar that's outsized like 45, though I was still willing to take because volatility is so low. A lot of times you get that quick rubber band snap back if you take it out real fast on the rollover. So let's keep watching here. Let's watch 46. There you go. Get some volatility back. Let's go. Good, good. ATR back up above 20, 21.8. We're only halfway through bar 46. Let's see if these bears can hold it. We got 2 minutes. 2 minutes might as well be 2 hours here in a situation like this. Let's see. Okay, 58 seconds left here on bar 46. Until proven otherwise, I'm basically looking for any logical reason to get short here. Okay, 46. Gonna close up as effectively a doji here. Watching 47 here. Now, a big concern of mine here, it's just, you know, I hope I'm proven wrong by this market, but I've seen this movie, and ATR is 21. Volatility is very low, and after a bar like 45, it's not uncommon to go sideways. Again, I hope 46 closes as a beautiful bear body, and we don't have to deal with the sideways trading range here, at least not for a little while yet. But you know it's common in low volatility environments for the market to make an attempt at a push and then go sideways. All right, 90 seconds. Let's see what 47's got in store, man. We love it. This is just about what we needed. ATR back up to 22. Seconds. Gotta love it. You know, we'll see if I have to use a stop limit or a limit. It's one of those scenarios where if the wick's a little larger in a low volatility environment like this with a sizable bar like 47 is, I can opt for a lower probability, higher entry. Let's see here. I'm going to default to a stop limit. Gonna wick higher. And I'll hit it with a limit if I can get a fill, and I can. There. Probability lower, risk also a little bit lower. Now I want to see if those bears can use bar 48, take out the wick low 47. ATR sitting 21, probably 22. All right, bears, we've got a whole lot more work to do. Let's keep that guy pushing. All right, ATR sitting at 23. Well, damn, bears! Let's go, man. Get up and go. Okay, ATR 22. Somebody light a fire, man. Let's go. Alright, off a cliff, man. Don't need too much. But a Trump tweet down to my limit order would be about right now. Okay, ATR is 22. Oh, Bears, somebody, come on, man. ATR, average range of a 5-minute bar, is 23. It's actually up from 18. All right, Bears. One more run at him, man. There you go, ATR 23. Roll over, big bar 50. What do you think? What do you guys think? ATR now 21, by the way. Gotta tell you, man, I'm getting real sick of this low volatility. So far, big bar 50, not quite getting the job done for me. Average true range here of a 5-minute bar on NQ. This is Nasdaq futures sitting at 23. Oh, man. There we go. There's the rollover. ATR 21, go! Oh, these bears. Oh, these bears. Literally ticks away. Goodness. Okay, we got bar 51. Rolling over to 52. So if you're just joining us here, it is low volatility city. I was within, I think a tick or two of take profit on the low of bar 51. And now the bulls are trying to sideways range this guy. Then somebody hand Trump his iPhone. I want to see 400 points of volatility. Let's get that ATR to 150. All right, if something crazy happens, scream and shout. Give me 2 minutes. I gotta grab some coffee or something, man. If something nuts happens, you blow up the chat. Just making a slight crawl. All right, I'll be quick. Be right back. All right. Well, how we doing? We're break even. Come on, you bears. Keep this baby pushing. So obviously, the concern here is that this turns into a sideways range, using this as the low and this region as sort of the high. It's a little early to start calling it that, but we're getting closer and closer. Easy glider. What's up, big dog? You used code BIG, huh? My man, so you got the best deal out there. Yeah, by the way, Apex is 90% off, single day pass right now. Take Profit Trader. If you're not trading Take Profit Trader, I really don't know what the fuck you're doing. Daily payouts, it's tremendous. When people ask like, hey, where should I start with prop firms? My answer is always the same. It depends, but where should you start? I would imagine for a lot of you, now, maybe this isn't the case for you, but I would imagine, correct me if I'm wrong, for a lot of you guys, the goal here is to be able to cut back at hours at work or quit your job entirely and trade full time, correct? I don't know if that's the reality for a lot of you guys. I don't know. That's the world I live. I assume everybody wants to trade full time. Sometimes my wife has to remind me. She's like, maybe not everybody necessarily wants to do this full time. I think some people maybe just want to pay some of their bills. I'm like, really? Who's right, by the way? Do some of you guys, are you just here to trade kind of part-time and whatever? Anyway, all that being said, if your goal is to go at least part-time, if not full-time, you need money coming in. I think Take Profit's the best one for that because they offer daily payouts. The payouts are very fast. It hits your bank. Once it's approved, you press a button. It's literally in your bank account. Like before you can even open the app. It's ridiculous. So I always encourage people, hit Take Profit first, get money coming in, and then when it's time to make the numbers bigger, go scale at Apex. But Take Profit Trader is running a flash sale right now for a little while. It's half off. You can pass faster than normal. Code BIG, B-I-G. All right, Bears, let's see what you got. Time says starting a business and just want to cover expenses. There we go, that works. It's actually a pretty good plan, man. Yeah, she knows I'm nuts. I'm out of my mind crazy. So my assumption is that everybody is here to take the market for everything it offers and quit their job. That's my assumption. Sometimes I have to ground my assumptions and say, you know what? Big dog, maybe that's not everybody's goal. And then I say, what the fuck are you talking about? Of course that's everybody's goal. This is an internal struggle, if you can't tell. Oh, man. ATR sitting at 22. Noob says, I realize ever since I started making money trading, I can't go back to 9 to 5. Yeah. Again, I've never worked a traditional 9 to 5. I've, of course, had jobs. My first job, I was park crew at a lot of people don't know this. When I was a teenager, I was sponsored as a snowboarder. So my first job was park crew because it made all the sense. I'm like, if I'm going to be here anyway, I might as well get paid to clean up the rails and the jumps. So that was my first job. I was a waiter. I was a personal trainer. I was in real estate. So I wouldn't say I've ever worked a traditional 9 to 5, so I can't really speak on it, but I will say when you take your first few payouts trading, I would imagine it's hard to, look at your alarm going off in the morning and it's telling you to get your ass up and go to work. I imagine it's difficult to look at that and say, yeah, that's probably what I should be doing. Because you're like, I might be losing money going to work. Now, if you plan on quitting your job, what I would encourage you is make sure you've seen all forms of market environments. If you've only traded in a trend environment, I would not quit your job before you've also seen a range environment. If you have seen all environments and you were able to produce enough revenue to live off of in all market environments, then I would say, what are you waiting for? Brando says, I found owning a business that brings in consistent income while trading on the side is the best option personally. That's a tremendous option, Brando. That's a tremendous option. Now, what I would encourage is don't let one suffer. I go all in on both. Because they'll only help each other. You start making more money trading, you take those profits, invest in whatever for your company. You start making more money out of your business, now you can beef up your trading portfolio. This is the beauty. It's synergistic. And some of you guys are like, dude, well, I don't have a business. Trading is plan A. Fucking good. When you start making a bunch of money trading, maybe you decide, I have a lot of empty hours in my day. I should start a business. And if you're like, I don't want to fucking start a business, I just want to trade. Tremendous. Do whatever you want. All I'm saying is being a trader and also a business owner, I have seen countless times, is very synergistic. All right, let's see if these bears have it in them. ATR 22. right, Bears, what you got? Big dogs. Man, this is crazy. Is anybody sitting in a trade here? Oh, shit. Little volatility. All right, Bears, what you got? ATR 22. Oh, you baby bears. We've got a bunch of infant bears at the wheel here today. Chat says, President taking questions live. Alright. Tell him to say something crazy. Say something crazy. ATR 20, 21-ish? Boom! Give me that fill! Full ATR. Okay. Tremendous. It's about time, isn't it? It's about time. Let's keep watching here. Yeah, Brando says, my business is my baby. It allows me to trade without the pressure of solely relying on trading profits. Yeah, you know, you guys want to know, just so you guys have full context here, and don't let this discourage you. I'm just going to tell you the truth that I've seen, because I've dealt with and worked with a lot of traders over the years. And let me tell you this is not a rule, okay? By any means, it is not a rule. I've seen some motherfuckers who all they're doing is trading. They're out on their ass. They move out of their parents' house, whatever, and they're like, I gotta make this work, man. And they do. And it's like, that dude, that dude is going to take this shit to the end of the earth. Crazy. But a consistent pattern that I see, again, not a rule, but a pattern, is the guys who don't need, they want, of course, the money, but the guys who don't absolutely need the money make the most. And they make it the fastest. And it's very clear why. It's because they're not worried about the rent or the mortgage. You know? But again, if you understand that, I think you're able to adjust, even if you adjust your situation or just your mentality. But I do think it's important to understand that, because in my head, that should give you hope. Because it's like, okay, so this isn't necessarily a skill or discipline issue. It's more of a mindset and situational problem for a lot of people, which it is. It is. You know, some of you guys, if you were like, I'm just going to trade RAM and be disciplined, if I imagine it, like in a certain scenario, if you were handed 10 million bucks and then it's like, okay, just go trade RAM, be disciplined, do a good job. Some of you guys who aren't profitable yet would be very profitable probably at this point. Or whatever methodology you end up trading. It doesn't matter. It doesn't have to be RAM, whatever. But instead, you know, I get it. You could say, well, Nico, you know, I am concerned about the mortgage, or I am concerned about the rent. I get it, dude. Life is really expensive. I'm just telling you the pattern that I've recognized. Big News says, that's the boat I'm in. Gratefully sold my biz in 2025. My man, tremendous. Tremendous. News had an exit. Big dog, we love that. Let's get a round of applause here for our boy News, man. And you know, we didn't know that about our friend here. But you can kind of tell. You can tell. Even just through text and chat, you can tell. It's like that dude, like our guy Manuel here, another example. Some of you guys are just built different, whether it's just in your veins or if it's in your veins plus the situation you put yourself in. How capable some of you are at being disciplined and detached from the short-term result, which is, I would argue, being much more attached to the mid and long-term result. It's just obvious. It's obvious. Without you even saying it, I can just tell by the way some of you guys carry yourselves. It's just, I've seen enough traders, I've dealt with enough traders at this point that it's just obvious to me. Question, how long did it take you to feel like trading will work? 5 seconds. Look, some of you guys might not be able to relate to this, but like, I hope you can. I hope every single one of you is like, yeah, me too. I have an unwavering belief in myself, in my ability to make things happen. I've always felt that way. Even before I had any proof that that was a legitimate thing to feel, I always felt like that. So to me, it was, yeah, obviously, like, there's frustrating times and there's very sad times in trading, and there's times when you're like, it'd be a lot easier to hang it up right now. But it was never a serious consideration. Now, how long did it actually take to work? Rolling into the 3rd year, so 2 and a little bit years. But to feel like it'll work, it was just a decision. It's like, yes, I saw the markets and I was like, that's what I want to do. And here we are, 10 years later. Actually, I think I was first introduced to all this and, well, it depends how you classify that. We all heard about Warren Buffett growing up, right, as kids. You'd see like a book or something in the library in elementary school. But I think my first real exposure to this was 2007, 2008. You know, we were impacted, my family was impacted a lot during that time. A lot. And the kitchen, you know, the TV on top of the fridge, the little TV would be on, and it was just the end of the world every day. And as a kid, you don't really understand what's going on. But they were talking about markets. And I just looked at that and I was like, even then I was like, man, there's got to be an opportunity there, right? So I'd say that was probably my first exposure to all this. I had no idea what the hell any of it meant, but neither does anyone else the first time they're exposed, right? Okay, 2 minutes, bar 57. Big News says, thanks, dogs. I've said this before, but the lesson of context first and then setup made the difference for me, my man. Tremendous. So you look at this. This is my concern. Do we end up seeing a big sideways trading range here? Let's find out. Ruff says, same bro, I used to sit and watch Mad Money, even though I didn't understand anything, lol, man, that's... Did any of you guys, the rest of you, watch Mad Money as a child? I don't remember, to be honest. I don't think that was really on in my house. I didn't grow up in a market family. But of course, you know, the news would be on, and it was all about markets in 2007, 2008. Chat, could be a sideways trading range with the possibility of a bull wake up. Yeah, so for me to start looking at this as with any idea at all of getting long, I would need to see a traditional RAM continuation trade to the long side, or the development, which would actually be slower, but the development of an actual soft bull channel. Right now, I don't really have any of that on my plate. So I'm looking at this as a range, if anything. Obviously, you have the potential here for a very soft bear channel. Keeping an eye on that as well. Ooh, Edge says my dad kept trying to make Forex work. Oh, man. Did any of your parents trade growing up? Any of you guys? I've never asked you guys this before, but there was no talk anywhere growing up in my world about trading. Zero. I'm curious if any of you guys kind of caught wind of this from your parents. Yeah, it definitely wasn't as... Back then, it was like people were just starting to, quote, go upstairs and trade electronically. So that would have been the very early days. And you probably would have to be kind of young if your parents... Or on the younger side, I should say, if your parents were into it. Yeah. Yeah, where we come from, man, no one talked about this stuff. This wasn't a thing. Okay, minute 15 out. We'll get 58 rolling over here into bar 59. All right, ATR sitting 19, dipping back below 20 here. By the way, ATR, that stands for average true range. That's the average range in points here of a 5-minute bar. These are Nasdaq futures. So, you look at this, and it's like, well, really look at this as a wedge a variety of ways. If we want to look at it as a regular wedge, it's probably going to kill off volatility even more. Really, the only logical thing here in my head would be to look for shorts. The problem is it's getting so tight that, you know, you're looking at less than 10 points until you get to the 50% area of this wedge, which is where that rubber band starts to get kind of loose, right? The way that I like to explain the situation here in ranges. Then it has less reason to go in either direction. Which really, you know, it gets tough here in low volatility environments. Able to make some money here so far on stream, but certainly not a record breaker day. Yeah, you know, honestly, guys, I think the most logical way to look at this is like this. Until proven otherwise. Basically, big sideways range. Yeah, it's a little early. We haven't seen a second test. But that would not surprise me at all. If we end up seeing just a sideways range, that would really be only about 30, 35-ish points wide. Pretty tight. ATR sitting at 21. There's 59 rolling over into 60. All right, guys. Well, I'm out of here for today. Hopefully, we see volatility pick back up here soon. If not, that's okay. We will continue to be patient, let it come to us, and put on logical trades that make logical sense and fit the context. Okay, we'll be back to record breaker days in no time. Don't you worry. All right, guys. Hey, see you tomorrow. Happy Midas Monday. Stay patient, man. Let it come to you. Don't force anything this afternoon. All right, but if it comes, slap it on. Accept the outcome, move on. All right, guys. See you tomorrow.